Welcome back to the Pro Ticker Deep Dive.
We have landed, and today we are shifting our perspective entirely. We're looking at something monumental, the space economy, but not as science fiction or even, just high-flying government tech.
No, not at all. We're looking at it as legitimate, investable, global infrastructure.
That is the crucial distinction.
It is. That's what our sources really hammered home. For decades, when you thought of space, you thought of NASA, Apollo, the space race. It's a government thing.
Right.
But the data we've reviewed makes it absolutely clear. This entire domain has crossed a commercial tipping point. I mean, this isn't just about rockets and inspirational moonshots anymore.
No, it's a $500 billion global industry.
Exactly. And the vast majority of that value is being driven by commercial infrastructure and services that are now, well, they're underpinning the rest of the global economy.
The structural change is what makes this a deep dive on infrastructure and not just another tech roundup. So get this. The global space economy reached $570 billion in 2023.
$570 billion.
That figure alone represents a solid 7.4% increase from the prior year. More strikingly, the industry has nearly doubled in size over the last decade.
Doubled in 10 years. But what's the composition? That's the really interesting part.
So look at the breakdown. 78% of that $570 billion value is generated by commercial activity.
78% commercial. I mean, that's a utility-level market share.
It is. We're talking satellite services, manufacturing, ground equipment, GPS receivers, all the things that keep the global digital economy running. And that's where the growth momentum is.
So only 22% is traditional government spending.
Only 22%.
That commercial dominance completely changes the investment thesis. It moves it away from speculative bets and, toward foundational infrastructure. But if 78% is commercial, why does government spending still seem to dominate the headlines and really set the technological pace?
Well, that leads us right to the core theme for this deep dive, which is the historical analogy. Space is now critical, dual-use infrastructure.
Okay, what do you mean by that?
Think of it like the build-out of the continental railroads back in the 19th century.
Or the internet backbone.
Exactly, or the internet backbone in the late 20th. Those projects required massive government sponsorship at first, right? But their long-term value was realized through the commerce and the services they enabled.
So the government de-risks the initial massive capital outlay.
Precisely. And these space networks for communications, navigation, observation, they're foundational. They undergird everything from financial trading to modern warfare. Government spending remains that massive, reliable anchor investor that makes the commercial build-out possible.
So our mission today is to drill down into those foundations, analyzing what exactly that $570 billion market is made of. We're going to look at the key verticals.
The launch revolution, for one.
Right, the launch revolution, how communications constellations like Starlink are changing the game, the huge driver of defense spending, and then crucially, we'll analyze the timelines for some of those more speculative ideas.
Like lunar data centers.
Yeah, exactly. We need to figure out which of these segments offer tangible returns today and which are still, swimming in pure speculation fueled by venture capital.
So when we talk about who's funding and building this infrastructural expansion, the power dynamics are, well, they're highly centralized. The United States remains the undisputed leader.
And that's largely a function of its government's decades-long sustained financial commitment.
It is. The hard numbers really illustrate that dominance.
So give us the numbers. How stark is it?
In 2023, the U.S. government dominated public space spending. It accounted for 64% of all global government funding.
64%.
We're talking about roughly $74 billion allocated annually.
Wow.
And to provide context for that massive scale, that single U.S. allocation dwarfs the combined space budgets of all the other major players. Europe's share sat at about 11%, and China's, while it's growing fast, accounted for about 12%.
And this isn't just NASA, right? This is defense. This is the Space Force.
Oh, absolutely. This reflects massive, sustained investment in defense satellites and the establishment of the U.S. Space Force. It's a deep national priority.
And that government lead, I assume it translates directly into private sector enthusiasm and momentum.
It does. I mean, private capital flows where the anchor customer, the government is stable and the regulatory environment is certain. The data shows the U.S. captured about 60% of all global space-related private investment in 2023.
60%. How does that compare to, say, Europe?
The imbalance is dramatic. Europe only attracted around 16% of that capital.
So that concentration of funding is really what fuels the new space boom in the U.S.
Absolutely. It's what fueled the profusion of American startups. Your
Yeah.
SpaceX, your Blue Origin, Planet, all backed by these deep pools of U.S. venture capital. It makes it extremely difficult for other regions to keep pace purely on private sector innovation alone.
That sets the pace globally, for sure. But what's truly fascinating is China's strategy. They aren't trying to beat the U.S. at the venture capital game. They're executing a very deliberate, state-backed, fast-follower approach.
And it's fundamentally focused on national self-sufficiency.
Right. The vertical integration is the crucial distinction.
China treats space not just as a technology sector, but as a domain of great power status. It's vital communication infrastructure and national security, and their budget expansion reflects this seriousness.
What does that expansion look like?
Their spending grew from just 2% of global budgets in 2000 to a massive 12% in 2023. That makes them the #2 spacefaring power by budget size.
And their entire strategy is based on avoiding reliance on foreign tech.
Precisely. They're building their own everything from the ground up. They have their own global navigation system, Beidou, competing directly with the US's GPS and Europe's Galileo.
And they're encouraging its adoption across Asia.
They are. They plan their own massive broadband mega constellation, often called Guowang, involving potentially over 13,000 satellites. This ensures they control their orbital internet access.
They also have their own space station.
A permanent in-orbit space station, Tiangong. And critically, they're aiming for crewed lunar missions in the 2030s. This deliberate, vertically integrated strategy ensures that space is viewed as essential infrastructure.
Meanwhile, Europe is trying to navigate this landscape, focusing heavily on what they're calling space sovereignty. It sounds like a recognition of their strategic vulnerability.
That's exactly what it is. I mean, Europe maintains robust civil programs through the European Space Agency, which has a substantial budget, around $7 billion. And they've had huge successes.
Like Galileo and Copernicus.
Exactly, the Galileo navigation system and the Copernicus Earth observation program. However, Europe has historically lacked that unified, massive military space investment comparable to the US or China.
So this drive for space sovereignty is a direct response to that gap.
It is. The best, most recent example is the EU's IRS satellite constellation. It's intended to provide secure, low-latency communications, explicitly reducing dependence on foreign networks like Starlink for critical governmental comms.
But Europe's dependence problem isn't theoretical, right? It's a current logistical and strategic hurdle. The sources highlight how they've been struggling just to get their own satellites into orbit.
That's a stark reminder of the geopolitical risks. Europe was forced to launch crucial Galileo satellites on U.S. rockets after Russian Soyuz vehicles became unusable following the conflict in Ukraine.
So the retirement of the Ariane 5 and the delays in Ariane 6 have created a real strategic anxiety.
A huge one. The launch gap has become a political priority. The entire point of projects like IRS is to rectify that vulnerability and ensure continuous, independent access to space. Europe's approach tends to be collaborative, but the investment scale is just smaller than the giants.
It's clear the market is expanding beyond these three major powers, though. We are seeing a real democratization of technology.
A significant proliferation, yeah. We now have 91 nations operating satellites in space.
91.
Including many developing countries using satellites for everything from communications and banking synchronization to agricultural management. This is expanding the total addressable market for sure.
But it must introduce some real concerns that investors and policymakers have to face.
Oh, absolutely.
What are the main downsides of this expanded access?
Primarily orbital congestion and intense competition for spectrum and orbital slots. With tens of thousands of satellites planned for EO, many of which are small, difficult to track, the risk of collisions is rising.
And the available radio spectrum is a finite resource.
It is. More players mean a crowded highway. And it means increased regulatory scrutiny on space debris and frequency allocation, which adds business risk to new ventures.
So summing up this global overview for investors, the U.S. sets the pace, fueled by massive government contracts that de-risk private capital. China is a highly motivated state-funded competitor focused on self-sufficiency. And Europe is striving for the same, but through collaborative projects.
And the global context is one of rapid expansion paired with increasing orbital congestion. The takeaway is universal. In all regions, space is now firmly established as critical dual-use infrastructure.
To truly analyze space as infrastructure, we have to start at the absolute foundation, the cost and availability of getting into orbit. The sources detail a phenomenal shift here. We've moved from an era of scarcity and astronomical cost to one of, well, relative plenty.
It is the single most important economic variable driving the current space boom. It's a revolution driven almost entirely by commercial reusability.
So what are the numbers? How active are we?
Global launch activity is at record highs. In 2023, there were 223 orbital launch attempts worldwide. That's an all-time record, significantly up from 186 the year before.
And more than double the levels from just a few years ago.
Maybe double what we saw in 2016, yeah.
And what's remarkable is that this spike is overwhelmingly due to one commercial player, which just underscores how effectively private industry has transformed U.S. capacity.
The statistics are clear. SpaceX, powered by its reusable Falcon boosters, conducted 98 orbital launches in 2023.
98.
To put that in perspective, that accounted for about 90% of all U.S. launch attempts that year.
90%. So if you take SpaceX out of the equation?
If you remove SpaceX, the U.S. launch capacity would have been dwarfed by China, which launched 67 rockets. The story of modern launch cadence is the story of SpaceX reusability.
This high cadence isn't just about setting launch records, though. It's the engine that drives the foundational economic shift, the cost collapse, which makes all these other business models we're about to discuss actually viable.
Absolutely. Reusability has slashed launch costs dramatically. Let's look at the concrete numbers. A standard Falcon 9 mission costs roughly $67 million for the payload delivery.
Okay, and per kilogram.
When you calculate it out, that translates to about $2,700 per kilogram to low Earth orbit, or LEO.
Now, compare that to the previous era of government-led launch.
The difference is staggering. Compare that $2,700 per kilogram to the U.S. Space Shuttle program in the 2000s, where the fully costed price exceeded $20,000 per kilogram to LEO.
20,000. So we're talking about an order of magnitude reduction.
A 7 to 10 times reduction in the cost of accessing space in less than 2 decades. This wasn't incremental improvement, it was a fundamental disruption.
And that rapid exponential reduction is what some analysts call Musk's law, right? The idea that reusability can drive down costs exponentially, like Moore's law did for computing.
That's the core principle. And the ultimate expression of this is Starship, which aims for full, rapid reusability of both its stages.
And what's the aspirational target there?
The aspirational target is less than $100 per kilogram to orbit.
$100.
Even if it initially settles at, say, $200 or $500 per kilogram, that would represent another 10x reduction on top of the already industry-leading Falcon 9 price.
If that target is even remotely achievable, it fundamentally changes the economic feasibility of the entire sector. What kind of projects become viable at that price point that just aren't today?
Projects previously deemed completely uneconomical. I mean, think about in-orbit manufacturing facilities that need frequent supply runs of raw materials, or deploying massive lunar-based components in one go.
It turns space from a frontier into a supply chain logistics problem.
Exactly. If you can put over 100 tons into orbit for $100 million instead of $4 billion, you transform the required capital for every future space enterprise.
So the U.S., largely via one company, is setting this hyper-aggressive pace. What about the global catch-up efforts? Who is closest to truly mastering reusability?
Competition is intense, but the gap in operational cadence is wide. Blue Origin's forthcoming heavy rocket, New Glenn, is designed with a reusable first stage, but its debut has faced repeated delays.
And Rocket Lab?
Rocket Lab is pursuing a fascinating dual strategy. They've experimented with catching their small electron boosters mid-air with a helicopter, and their medium-class neutron launcher is designed to be reusable from the start.
China's working on it too, I assume.
Oh, feverishly. They're testing grid fins and developing partially reusable methane-fueled rockets like the Long March 8 variant to compete on cost.
But the critical near-term challenge is Europe. They've fallen dramatically behind, creating a strategic vulnerability.
The launch gap is a major issue for their stated goal of space sovereignty. India, through its ISRO agency, actually surpassed Europe in launch count in 2023.
How many did they each do?
India performed 7 launches versus Europe's 3.
Just 3.
This low count was a direct result of the retirement of the reliable Ariane 5 and significant delays in its successor, Ariane 6. This forces European satellites to book rides on American or Indian rockets. It's not just an embarrassment, it means European firms are dependent on their competitors.
Let's shift focus to the market dynamics this revolution has created. We saw a ton of small satellite launch startups aiming to carry less than 200 kilograms. But now, Ironically, they're getting squeezed by the success of the big guys.
It's a classic scale economy problem. Dozens of smallsat startups emerged to cater to the small satellite boom, but SpaceX completely undercut that business model with its transporter rideshare program.
How does that work?
They launched 50 or more small sats on a single Falcon 9 at incredibly low commoditized rates under $5,000 per kilogram. Many small launch ventures just can't compete on price.
So for the small launch sector to survive, they have to sell something other than low-cost lift. They have to sell niche capabilities.
Exactly. The successful ones survive by offering niche value, responsive, dedicated service to specific hard-to-reach orbits that a massive rideshare can't offer on demand. Rocket Lab's Electron is the most successful example of this.
But consolidation is expected.
Absolutely. We will see a shakeout, leaving only a few specialized Western small launch providers, while others will be absorbed or fail.
And on the opposite end, Starship and other super heavy launchers are set to redefine what kind of massive infrastructure we can even build in space.
These mega launch vehicles are the ultimate enablers of the long-term vision. Starship, once fully operational, could launch over 100 tons to LEO.
Which allows for entirely new design philosophies.
Right, like launching entire components of a space station fully assembled, or building the massive Starlink Gen 2 network far more rapidly.
Now contrast that commercial focus with NASA's Space Launch System, the SLS, which debuted in 2022 for the Artemis I lunar mission. It's an incredible piece of hardware, but the cost.
The SLS is reserved for crewed deep space missions and represents a different economic model altogether. It's an incredible heavy-lift vehicle, capable of 95 tons to LEO, but at an eye-watering cost estimated at around $4 billion per launch.
$4 billion per launch.
Yeah. That figure just highlights the massive cost difference between a government-developed single-use system and a commercially developed, fully reusable one.
Okay, so the investment implication here is vital. Cheaper launch is the foundational infrastructure that validates every other business model in space.
It's the single most essential piece of the puzzle. The feasibility of Planet's daily imaging of the entire Earth, or Starlink's plan to deploy tens of thousands of satellites. It's only possible because launch costs have plummeted.
So investors should favor launch companies with diversified revenue streams and scale.
Exactly. Like SpaceX with Starlink, or Rocket Lab, which strategically generates income from both launch services and building spacecraft for clients, that gives them more resilience against the small launch squeeze. Launch is capital-intensive and risky, but the market for services enabled by cheap launch is absolutely booming.
With cheaper access to space established, the next layer of critical infrastructure is the constellations themselves. These are the workhorses.
And they're increasingly operating not as solitary units, but as coordinated, massive fleets to provide global coverage and resilience. We see two major areas driving growth: communications and Earth observation.
Let's start with communications. The narrative there is dominated by one name: Starlink. It's the primary example of a mega constellation transitioning from a concept that sounded like science fiction to a global reality.
The sheer scale is just difficult to grasp. As of early 2026, SpaceX has deployed over 9,400 Starlink satellites.
9,400.
Which means Starlink alone accounts for about 65% of all active operational satellites in orbit.
65% of all satellites. Wow.
This decentralized orbital internet infrastructure now provides broadband to maritime, aviation, and rural users across over 150 countries. Their execution has been flawless.
And the subscriber growth reflects that.
Explosive growth. From 1 million users in 2022 to an estimated 9 million by the end of 2025.
9 million users paying a monthly subscription. That places it firmly in the realm of a utility-scale communications provider. The revenue must be ramping up fast.
It is. It hit about $1.4 billion in 2022, and it's likely several times that now as the subscriber base matures. The demand signal for global low-latency broadband is just undeniable.
But Starlink's success has mobilized serious, deep-pocketed competition, primarily from Amazon's Project Kuiper.
Kuiper is the highly anticipated challenger. They are late to the game, with only test satellites launched in late 2023.
But Amazon brings an unparalleled ecosystem advantage.
And they've backed their commitment with massive resources. They've earmarked over $10 billion for the project and secured 77 heavy launch vehicles from ULA, Blue Origin, and Arianespace.
hedging their bets on launch.
Right. Their plan is to deploy 3,236 ILEO satellites, and the aggressive timeline is driven by a non-negotiable FCC mandate.
What's the deadline?
Amazon must launch half its constellation, roughly 1,600 satellites, by mid-2026. This requires an incredibly aggressive, high-cadence launch schedule throughout 2025 and 2026.
So the competition between Starlink and Kuiper won't just be about speed and price. It's about strategic integration.
Exactly. Starlink's advantage is cost control and launch cadence thanks to Falcon. Amazon's real advantage is ecosystem integration. They can bundle connectivity with AWS cloud services.
Or offer discounted connectivity to Prime members.
Exactly. This is where the competition gets fascinating. Scale versus ecosystem integration.
That leaves OneWeb Beetlesat, the smaller player that recently completed its first-generation network.
OneWeb, now merged with Europe's Eutelsat, is a distinct case. It's a smaller, complete first-gen network of 648 satellites, focused primarily on enterprise and government markets.
And their strategy is integration.
Right. They're blending their LEO capabilities with Eutelsat's existing fleet of higher latency GEO satellites to offer hybrid services. Eutelsat is one of the few immediately investable hybrid cases in this sector.
And globally, we can't forget the state-nurtured competition from China.
China has announced plans for its own massive mega constellation, Guowang, or China SatNet, potentially involving over 13,000 satellites.
And this is explicitly state-nurtured.
It's a national utility project, not a purely commercial venture. It's to ensure China isn't reliant on foreign satellite internet and to secure their preferred orbital slots. We should expect intense regional competition from this.
Now, let's drill down into a subvertical that is rapidly blurring the line between terrestrial cell networks and space infrastructure. Direct-to-device, or DTD, connectivity.
DTD is perhaps the most disruptive frontier in communications right now. The goal is to use satellites to connect directly to regular, unmodified smartphones.
And special antennas.
No special antennas. It eliminates the need for specialized satellite phones. The market potential here is colossal.
I remember this being highly speculative just a few years ago. How far has the technology actually advanced?
It has moved incredibly fast. A key milestone occurred in April 2023 when AST SpaceMobile achieved the first-ever two-way voice call via satellite to an unmodified cell phone.
So they proved the physics works.
They proved the physical mechanism can work, clearing a huge technical hurdle. Link Global was another pioneer, being the first to send an SMS text message from space to a phone.
And the Titans are rushing to integrate this capability.
Absolutely. Starlink and T-Mobile have a partnership. Apple is already using Globalstar satellites for its emergency SOS feature on iPhones. The entire telecom industry recognizes that satellite is the only way to achieve true global coverage.
For investors, this creates interesting, though highly volatile, specialized plays. AST SpaceMobile is a pure-play stock here, but it's still pre-revenue.
That's the essential investment tension. The successful tests add immense credibility, but they still have to deploy and monetize an entire operational constellation. It's a classic high-risk, high-reward scenario.
Okay, let's move to the other cornerstone, Earth observation, or EO.
This provides the surveillance and data equivalent of an environmental nervous system for the planet.
And the shift here is profound. We've gone from occasional high-fidelity images from large, expensive government spy satellites
to swarms of smaller commercial satellites that provide incredibly high revisit rates and global coverage, essentially creating a living daily record of Earth.
Planet Labs is the prime example here.
They operate the largest EO constellation by number, about 200 Dove nanosatellites. They image the entire Earth landmass daily at a useful 3 to 5 meter resolution.
And they sell this as a subscription service.
Exactly. Earth data at daily cadence via subscription. Their customers are in agriculture, finance, government. Planet is a pure-play new space data company, growing revenue to $191 million in FY 2023.
And contrast Planet's high-cadence, medium-resolution model with Maxar Technologies, the traditional high-resolution leader.
Maxar is the established high-fidelity government supplier. The fact that Maxar was taken private in 2023 for $6.4 billion is extremely telling.
Private equity saw the strategic value.
They recognized its reliable, sticky revenue streams, particularly from long-term classified government contracts. This acquisition signals that the intrinsic strategic worth of these data assets is extremely high.
Beyond just visual light, we're seeing specialized sensor networks creating crucial niche markets.
This is where the technological refinement comes in. We have to highlight synthetic aperture radar, or SAR. Companies like Capella Space in the US and ICY in Finland launch small SAR microsats.
And the key advantage of SAR is it can see through clouds and darkness.
Consistent 247 monitoring, regardless of weather. SAR imagery is crucial for maritime surveillance, tracking infrastructure integrity, and disaster response. It fills a critical capability gap.
And then there's Spire Global, which uses tiny satellites to collect passive radio frequency signals.
Spire operates a fleet of about 100 nanosatellites optimized for three key data streams. They collect highly accurate weather data, they track ships and airplanes, and they offer geolocation of RF emitters.
So they're a themed constellation focused on climate and environmental data.
Exactly, offering subscription services to organizations like NOAA. This model moves far beyond just taking pictures.
The strategic value of this commercial data was absolutely cemented by the conflict in Ukraine. That was a huge turning point.
A true watershed moment. Commercial EO provided frequent, unclassified, and often near real-time imagery of troop movements.
And the government response was swift and massive.
The U.S. National Reconnaissance Office signed its largest ever commercial contracts, the Electro-Optical Commercial Layer Program, committing billions over a decade to buy commercial imagery. This secures predictable, massive revenue for firms like Maxar, Planet, and Black Sky.
And this feeds directly into the blooming geospatial intelligence industry, finance, logistics. They're now dependent on satellite analytics.
The value is shifting downstream to the analytics layer. Hedge funds track retail parking lot counts. Commodities traders estimate oil storage tank levels.
So the real money is in moving from selling raw images to actionable insights.
Exactly. It's becoming a sauce-like info utility. The massive indirect economic benefits underscore this potential. Earth observation data is projected to add over $700 billion in value to the global economy by 2030.
So constellations are capital-intensive upfront, but they create recurring, high-margin revenue streams that look a lot like a utility, especially with anchor government contracts.
Right. And the recognition that space is a critical military domain is the second major pillar driving this investment. Global military space spending reached $57 billion in 2023.
Up 18% from the prior year.
And yet again, the U.S. accounts for the lion's share, 80% of that total, roughly $45 billion.
That massive public investment acts as a demand floor and a technology incubator. Let's look at the key defense verticals, starting with the most basic, eyes and ears from orbit.
First is intelligence, surveillance, reconnaissance, or ISR. This includes imaging, SAR, and signals intelligence. The traditional U.S. approach relied on large, bespoke classified systems.
But the strategy is evolving.
Quickly, the U.S. is increasingly augmenting these systems by buying more data from commercial providers like Planet and Black Sky. This ensures resiliency and provides a stable, lucrative revenue stream for those commercial firms.
The most architecturally disruptive shift, though, is in missile tracking and early warning, driven by high-speed threats.
This is where the budget is flowing. The traditional approach relied on a few large, expensive satellites in geostationary orbit, or GEO.
Like the SBR system.
Exactly, which cost billions each. The new strategy is shifting entirely to layered LEO constellations built by the Space Development Agency, or SDA.
I keep hearing about the SDA. Unpack why this shift from GEO to proliferated LEO is so strategically critical, especially against threats like hypersonics.
It comes down to physics and resilience. Hypersonic missiles travel fast and can maneuver, making them hard for a few distant GEO satellites to track. By shifting to hundreds of cheaper interconnected satellites in LEO, the SDA achieves several advantages.
Resilience being the big one.
Resilience is key. If a few satellites are taken out, the network survives. There's no single point of failure. Second, coverage and speed. LEO satellites are closer, giving them better resolution and more consistent coverage. And third, latency.
The information gets to the commander faster.
Within seconds, which is crucial for intercepting a hypersonic threat.
That transition to a resilient, proliferated LEO network must be a colossal opportunity for defense contractors and for new space firms.
It's a massive multi-decade build-out program. For example, the SDA awarded $3.5 billion in contracts in late 2025 to a mix of defense primes Lockheed, Northrop, L3 Harris, and a key new space firm, Rocket Lab.
And that's just for one tranche of satellites.
Just for 72 tracking satellites for Tranche 3, designed to be launched by 2029. This flow of billions provides immense revenue visibility for these firms.
Beyond tracking, secure communications and PNT positioning, navigation, and timing remain non-negotiable foundations.
They're the absolute lifeblood of a modern military. Militaries rely on robust comm satellites. And again, we see the sovereignty driver here. Europe's IRS is aimed at providing sovereign, secure communication channels.
And PNT is the ultimate dual-use infrastructure. It underpins not just defense, but the entire global economy.
It's completely indispensable. GPS, Galileo, Beidou, they underpin everything from precision weapons to smartphone maps to banking network synchronization.
And the commercial scale of PNT is often forgotten.
It is. The GPS industry alone, receivers, services, chips, was the single largest commercial space segment in 2023, valued at $209 billion.
And the continuous need to maintain and upgrade these systems provides stable, long-term revenue.
Especially for defense primes like Lockheed, which builds the GPS satellites.
What's really fascinating is how the military and commercial markets are intersecting, creating new revenue streams.
This blurring is accelerating. The Pentagon is leveraging commercial systems for capacity and lower cost. Starlink was used extensively by Ukraine's forces.
Which led directly to SpaceX creating its Starshield division.
Exactly, to offer bespoke military networks using Starlink-derived technology. Commercial imaging and RF intelligence firms are also now regularly integrated into military planning.
So this changes the investment landscape. Defense contractors are the major beneficiaries, offering lower risk exposure backed by multi-year government contracts.
If you're looking for stability in the volatile space sector, defense is the most recession-proof driver. Companies like Lockheed Martin, Northrop Grumman, L3Harris, they're deeply embedded in these multi-year SDA programs. They offer stable returns.
Now, we pivot from the current revenue-generating infrastructure to the more speculative, longer-term future. This is where the hype originates, and we need to balance that with a dose of reality.
Let's start with one of the most futuristic concepts, orbiting data centers or space-based AI compute. The hype is compelling. Ultra-low latency, processing data where it's collected, isolation from terrestrial disasters.
Right. Startups like Leo Cloud and Orbit's Edge are talking about space edge cloud region servers orbiting the Earth that customers can access like another AWS region.
The vision is powerful, but the reality check is severe. Running high-performance computing in space is incredibly difficult. First, you have radiation. Advanced microchips are extremely sensitive,
So you need constantly radiation hardening.
which often limits the performance or age of the hardware you can fly. Second, thermal management is a major hurdle. On Earth, we use liquid cooling and massive HVAC systems. In space, you rely on inefficient radiative cooling.
Which requires huge, heavy radiators.
A huge mass penalty. And if you can't cool them, you can't run the high-performance AI chips that make the whole concept valuable. And then there's power supply, limited to solar panels and batteries.
So the immediate viability isn't in general cloud services, but in highly specialized targeted processing.
Correct. The near-term viable value is in edge computing in orbit. Satellites performing onboard AI to optimize data, like immediately filtering out clouds before transmitting the final image. This reduces bandwidth usage.
General-purpose cloud services from space are a long way off.
Moderate to long-term prospects, unlikely to make economic sense until launch costs drop drastically with something like Starship.
Okay, next up, the ultimate disaster recovery location, lunar data storage. The moon as an off-planet backup. This sounds more like preservation than commercial utility.
That's the framing Lone Star Data Holdings is pitching the moon as the ultimate safe haven for preserving human knowledge. They did demonstrate a proof of concept in 2024.
On the IM-1 lander.
Right. They sent a prototype 8TB data storage device, the first commercial lunar data center demo, and proved two-way data transmission.
That's a huge psychological milestone, but financially, how viable is it commercially compared to, say, an underground bunker in Switzerland?
It's niche and highly speculative right now. The reality check is cost and access. Launching mass storage is astronomically expensive per byte, and latency persists. The moon is 1.3 seconds away, one way.
Fine for deep archiving, but unusable for mission-critical applications.
Right. For true commercial viability, you need a permanent lunar base providing power and shelter, which won't exist at scale until the 2030s. The lunar niche is compelling only for extreme long-term preservation scenarios. For investors, this remains a moonshot.
So we have to separate the long-term vision from the near-term business case. That brings us to our investment roadmap.
In the short term, the next 6 to 12 months, investors should focus entirely on execution and specific physical milestones. These tangible events will drive volatility.
What are the key milestones that confirm the viability of the infrastructure foundation?
We're looking for major rocket debuts and deployment progress. First, watch Starship's orbital flights. A successful orbital launch is a huge catalyst. Second, ULA's Vulcan rocket inaugural launch is critical for their ability to compete. Third, Europe's Ariane 6 readiness is vital.
Any further delays just send business to competitors.
Immediately. And on the constellation side, Amazon Kuiper's launch ramp-up is key due to that strict FCC deadline. They have to demonstrate an aggressive launch schedule.
What else?
Progress in D2D, like AST Space Mobile launching operational Bluebirds, and monitor major government contract awards like the DoD's National Security Space Launch Phase 3 decisions. And finally, keep an eye on the financial health of the small-cap SPAC companies. High cash burn means they'll need to raise capital.
Moving to the medium term 3 to 5 years, roughly 2026 through 2030, this is the period for market validation scaling.
By this time frame, we'll have definitive clarity on the constellation market. Starlink will be well into Gen 2. The focus shifts entirely to financial viability. Can they maintain ARPU and prove long-term profitability?
And Kuiper should have global interim coverage.
We'll see if they can capture meaningful market share by leveraging the Amazon ecosystem.
We should also see validation of new services beyond pure connectivity.
Orbital servicing should become routine. Northrop's mission robotic vehicle should be operational, extending the life of commercial satellites. And initial private space stations, like Axiom Space's modules, are targeting operational readiness by 2028.
And government programs will reach fruition.
Yes. We'll see the success of NASA's Artemis's third crewed moon landing. More importantly for investors, the Space Force's SDA constellations will be fully deployed, leading to continuous, multi-billion-dollar production contracts. This is where ventures must transition from development stories to real, profitable businesses.
Finally, the long-term 10 years and beyond, into the mid-2030s. This is the grand vision territory.
This is where we anticipate the emergence of the cislunar economy, the ecosystem between Earth and the Moon. A sustained human presence will necessitate lunar logistics, power, and comms networks.
The new infrastructure frontier.
It is, and the most paradigm-shifting concept long-term is space solar power.
Beaming power to Earth from orbit.
If the demos are scaled up, by the mid-2030s, we might see operational pilot plants. China aims for a 1-megawatt station by 2030. Success here would prove the viability for a massive new energy infrastructure industry.
Ultimately, the long-term vision is one of complete invisible integration.
Space infrastructure becomes so interwoven with 5G, IoT, and the digital economy that it's just an invisible part of Earth's overall digital backbone. Morgan Stanley projects the industry could top $1 trillion by 2040, driven heavily by satellite broadband.
Let's give the listeners some investable vehicles across these segments, acknowledging the wide spectrum of risk for launch and manufacturing.
You have the commercially focused players like Rocket Lab, RKLB, which is diversified, and then you have the government-backed defense primes, Lockheed Martin, LMT, and Northrop Grumman, NOC, which provides stability.
For satellite communications.
You have the proven player Iridium, IRDM, the hybrid LEO-GEO play Eutelsat, and the adapting GEO incumbents like Viasat, VSAT.
In Earth observation and analytics, where the value is shifting downstream.
You can look at the pure play data companies like Planet Labs, PL, and Spire Global, SPR. And crucially, the analytics picks and shovels firms like Palantir, PLTR, which integrate the data.
And for defense, where the massive government spending is concentrated.
We return to the primes, L3 Harris, LHX, and Kratos, KTOS, the latter being heavily involved in ground systems for the SDA build-out.
And for broad exposure, there are ETS.
Yes, the Procure Space ETF, UFO, which tilts toward pure play firms, and the ARK Space Exploration ETF, ARKX, which is actively managed and includes broader tech links.
Crucially, investors must be able to distinguish between revenue-generating infrastructure and speculative narratives. How do you separate hype from reality?
Look for the characteristics of a utility. Revenue-generating plays have stable, growing revenue, an operational track record, and scale like Starlink's 9 million users, and a visible backlog like Lockheed's government contracts.
They're building a utility with a sticky data moat.
Exactly. Whereas the speculative narratives often rely entirely on future-oriented business plans. They're often pure-play prototype companies with very high cash burn. Your valuations hinge on a single successful prototype launch.
So the prudent strategy is to avoid making the core of your portfolio dependent on one successful prototype.
I recommend the barbell approach. Focus mostly on proven players, the Lockheeds, the Iridiums, the Rocket Labs, for steady returns. Then, take limited, calculated small positions in moonshot ideas, accepting the high risk-reward ratio.
This deep dive has shown us that the space economy is rapidly transitioning from a high-tech government endeavor to an investable, hard infrastructure theme. The cost of access is plummeting, which fuels the deployment of massive, capital-intensive satellite constellations that are functionally utilities.
The growth potential is immense. We must reiterate that long-term projection. The space industry could top $1 trillion by 2040, with more than half of that growth driven by satellite broadband and the integration of space data into global commerce. This is a sustained, multi-decade transformation.
And here's the final provocative thought we want to leave you with. The true value of space infrastructure isn't just in the companies making the satellites, but in the downstream applications and data it enables for the terrestrial economy. Think about how many services you use daily: GPS for navigation, accurate weather forecasts, high-frequency stock trading, even the stability of your mobile network, that rely completely on space infrastructure, often without you even realizing it. In the next decade, that integration will only deepen.
It's an investment in the future connectivity and knowledge network of our entire world.
Thank you for joining us for this pro-ticker deep dive. We encourage you to keep exploring the sources and keep asking those deep questions.